Gold is having one of the best two-day rallies that I've ever personally seen in the time that I've been trading the markets. There's no question that with everything that's been going on, uncertainty is very, very high. And we see this might actually be one of the prettiest trades I've ever actually had on gold. Now, I do want to be transparent. I took an entry here, stopped out, and then re-entered here. So this is not my first attempt to get long gold. It is the second one. And you can see it ended up being pretty much a picture perfect entry. We tagged this level that I've been watching and off to the races we've gone. A nice 61.8% retracement level in combination with a bullish score on the edge finder is what got me into this trade. From here, my plan with the gold trade is to look for a solid close. Well, actually, we're getting pretty close. If we close like this today, my plan will be to take my stop loss, which has been trimmed here, and actually move it into profit. Any updates that I make to this position will be shared inside of our VIP Discord signals group where I took this trade. Part of the reason that the gold market looks so bullish today is that the dollar index is really falling and tumbling down lower. We're going to talk about that later in this video. And the stock market is giving back some of its yesterday's big ginormous gains at the time of recording this. Yesterday, the S&P 500, the NASDAQ, they were up at some point over 10% in the day. Absolutely incredible. And I believe that was the second best NASDAQ return day in history, which is remarkable to say we're living during these chaotic times. To think that in just 1 week, we went down by 12.7%, then came all the way back on the S&P 500, putting a 20% range back and forth on this is absolutely insane. So in today's video, we'll be taking a look at indices. We'll look at commodities. We'll talk about currencies, and we'll talk about where we could potentially hide out in all of this chaotic trading, or if there's some better opportunities around the corner. All I ask as we get started is if you could hit that thumbs up button for me, subscribe if you're new, and let's get started. And today we had some excellent news in terms of developments on inflation. If we take a look here, what you can see is that we had a CPI forecast of 2.6%, and in fact, we got a reading of 2.4%. This is great in terms of the inflation story because this is much closer to that 2% target that the Fed wants in order to begin cutting interest rates. And there's two types of rate cuts that we could get. Panicked rate cuts because there's a fear of a recession, and there's the rate cuts that could come because inflation looks like it's moderating. Obviously, we all want the latter in terms of just general economic prosperity. So why on earth then is the S&P 500 back down today? Well, I think there's some mechanics here and some physics of the market that we need to discuss. A vast majority of market participants were on the sell side going into this week, meaning people were very scared that this market was going to crash. And so what we saw yesterday was a violent example of a short squeeze. So many people sold their portfolios, they sold out of stocks, they gave into that fear and tried to short the market, betting that it was going to go lower. And in 30 minutes, the market went up 10%. Now, of course, I put a video out last night about why this was. Basically, Trump raised tariffs on China up to 125%, which is a negative thing in terms of market prosperity. But then there was a huge positive, which was the 90-day pause given to all countries that had not retaliated to the United States' basically issuance of wanting to renegotiate trade. So people who have been relatively compliant with the United States and willing to work, willing to negotiate, which by the way is most of the world and most of our allies have actually come to the negotiation table. I'm talking Japan, South Korea, EU, most other places, most major economies. They don't love this. Nobody's going to love this if you're benefiting from the US consumer, but at least they're willing to work. And so those countries were given a 90-day pause to the impending retaliatory tariffs. A 10% baseline was applied in the meantime for these tariffs, giving many companies time to prepare for this, many countries time to negotiate with the United States. This was considered as a big sigh of relief, and hence the market jumped so violently. But Nick, why is the dollar index down? This is a really interesting conversation, and if you stick around to the end of this video, I'll actually be sharing a podcast clip with Kenny from the Market Insights podcast. I asked him this question because I take all my hard questions to Kenny. He's a smart dude, and he has some really good knowledge on this. We'll play that clip towards the end of this video, but in the meantime, I'll just want to give you my thought on the dollar, right? We have bearish price action, momentum to the downside, and while the 90-day pause is a sigh of relief in the short term, it doesn't mean that tariffs are behind us and that this is not an ongoing and troublesome conversation for the globe, right? there's still scrutiny of what this trade war could lead to in terms of global recession and uncertainties, and the US is still perceived as potentially going to have some trouble with all this. What we see conversely is other safe havens like the Japanese yen, the Swiss franc, getting very strong today as people rush to different safe havens, including my beloved gold. Like I said at the start of this video, there's a ton of uncertainty about what's happening in the world, and even though there's a 90-day sigh of relief, it doesn't mean we're out of the woods just yet. So there's this rush into safety vessels that are not the US dollar, and that is what we're seeing playing out. The Japanese yen up 2% today as a basket or an index. So when it comes to indices, what do we need to see? One thing I do want to point out that I find very peculiar in all of this is that while the markets were crashing, we actually saw institutional money accumulating long positions as of the latest available COT data. I just found this to be very coincidental and very interesting that smart money institutions actually was buying the dip ahead of this ginormous rally. Of course, we'll get the latest available data as of Tuesday tomorrow with the COT data, which will populate automatically within the Edge Finder tool that we're showing here. Another powerful piece of information is that, again, part of the reason we saw such a violent move up in indices was because of the disposition of kind of the crowd, right? The crowd is super bearish still, and this has presented a wonderful opportunity. And I actually bragged a little bit on social media yesterday about my biggest one-day performance. I'm not gonna lie, it was a pretty cool experience, and I wish I had more days like that. At one point, my portfolio was up $100,000 on the day. Now, granted, let me also give you a little bit of transparency around that. I made a post on my Twitter or X account about this actually giving you the full context of my performance of this year. I'm basically break even at this point. And the reason I make that very important distinction is because I had a really good day yesterday, but I'm still just clawing back some of the drawdown that I've been going through as a trader this year, as most people have. So I'll just read you this post really quick. Yesterday, I posted a picture of my biggest trading gain ever, but here's some important context. While yesterday was a solid day, 2025 overall has been an absolute grind, and if you watch the videos here, you know that. At one point, I was down over $100,000 in a single month, so 30 days, which is painful, but I am working on a larger capital basis, so this was about a 10% drawdown for my account. While the S&P 500 has seen a peak to trough sell-off of about 21%, I'm about break even for the year so far, which I will take any day long, as the S&P 500 is kind of my benchmark. So if I'm outperforming by a wide margin, I'm very happy with that, even if it means I'm break even for the year. I've been able to keep things mostly afloat by trading gold a lot, as you guys just saw, maintaining available cash and margin positions when markets were at their all-time highs, and stopping out of positions that have gone wrong. And I do think that it's important to keep some level of transparency to what I'm doing here, because I'm not always right. Clearly, I've been going through a drawdown like most investors and traders in this market, but I think I'm weathering the storm pretty well, and I'm pretty proud of how I've done so far this year, even if it doesn't mean I'm making millions of dollars this year. I'm doing the best I can given a really tough trading market environment. And if I'm telling you this because if you're out there and you're like, wow, yeah, you know what, I've actually done, when you say it that way, I've done okay too. I'm break even this year, or I'm down just a little bit. If you're holding out okay this year, good on you. So back to my point with sentiment, right? So everybody seems so bearish in this market, and that is part of the reason why I think I had that remarkable up day, is because everybody was on one side of the boat, and then we got a spark of good news into a full room full of gas. The Edge Finder, by the way, is currently 40% off during our biggest sale event of the year. This is our third year celebration of since when we initially launched the Edge Finder. It's been a very powerful tool over the years, and many traders have benefited from getting more insights in their trading through the tools that we've built. For a limited time, you can currently get our lowest price all year long for the anniversary sale using the information on the screen. You can use promo code YTVIP. It's linked in the description down below, or if you want an extra 5% off, send us a direct message on our website, a1trading.com, using the first link in the description down below. Like I said, you can chat with us directly on a1trading.com in the bottom right. So now taking a look at the indices, I still think that positioning is still very bearish, right? People are still very, very concerned, and we can see that pretty clearly. I mean, look at this sell-off here today. This is nothing to scoff at. I mean, it looks small in relative to yesterday's up move, but it's still just showing we had a little bit of a short squeeze yesterday, but perhaps there's still a lot of bearish sentiment out there. what I'm looking for from a trading perspective on the NASDAQ and S&P 500 is, and still it has been and still is, we need to see this level break and close decisively. And what you can actually see is sellers coming in at this level and pushing prices lower. So what I'd be looking for would be a turnaround and a actual breakout that seems to have some legs to it, would have higher lows and higher highs. So I'll tell you straight up, this is probably a trade that I would look to take. We had good inflation data. I think overall jobless claims have been relatively healthy, and all things considered, I like the risk to reward, but I need price action to show me signs that we're actually reversing before I take a bunch of long positions on the NASDAQ or S&P 500 with a tight stop. And I've said it many times on my channel here recently, although I am not trading on a short-term basis the S&P 500 and NASDAQ longs, I have been building positioning in some of the stocks that I really like. You can see many of them are down here today. Things like Tesla, Robinhood, these things were up 20+% yesterday, giving back some of those gains, which I think is a very healthy and normal thing to do. Even if we are going to continue to see upside, you're going to have days that go up, days that go down. That is the nature of this very violent market. And take a look at the euro, which is about to reach my target. I'm about to close out profits on this one. Actually, I will probably close out profits just after I finish recording this video, locking in some very nice gains here on the euro dollar, which at the time of recording, I am up 396 pips on. This has also been a no joke trade. The euro is up another 2% today as people are looking for alternatives to the dollar with uncertainty going on with tariffs. Another trade I'm in is the Kiwi dollar. I plan on continuing to hold this one to see if we can get a move back up to the 0.58 level here. So I've got euro dollar looking good, Kiwi dollar looking good. The currency trading has mostly been very good. I do have also a position, however, that is stuck in drawdown, which is my CAD Swiss trade. I have 2 losing positions, but these are very small positions, very low use of margin or leverage. And so I can continue to hold these and work with the position. But again, euro dollar looking to close profits, Kiwi dollar watching to see if we can get one last push higher for a possible opportunity to take profits on that one too. And today's video is sponsored by Vantage. Vantage Markets allows traders to trade CFDs for pretty much everything. You can trade stock CFDs, like individual stocks like Apple and Microsoft. And of course, you can also trade Forex. You can trade gold and silver CFDs, indices for not just the US, but globally, and so much more. They also offer a very generous welcome bonus to my subscribers. If you'd like some information about this and you'd like to do your due diligence on Vantage for yourself, make sure to use the specific link in my description. That is a referral link, so you'll be helping out my channel, but also it will qualify you for that extra welcome bonus they're offering to my subscribers. One of the more interesting moves in markets at this time is the dollar index. And I had a very specific question for Kenny that I think might be worth checking out from the Market Insights podcast. If you'd like to hear the full podcast, we'll leave that linked in the description and pinned comment below. Yeah, and as Kenny, you mentioned, this inflation report coming in cooler than expected is definitely welcomed by the Fed, right? They're sitting there and they're looking for more cards to play at the table in case things do continue to be volatile, right? And so this cooling inflation is obviously a welcomed thing. It gives the Fed more of a reason or more of a chance to cut rates if inflation continues to trend in this direction, right? Of course, this is one report, but we had a cool print last time. We would like to see more from here, but 2 cool prints back to back, and oil prices where they're at, trending lower here, is a at least promising sign in terms of the Fed's ability to cut interest rates for the quote unquote right reasons, right? Falling inflation. That being said, I had a question for you, Kenny, in terms of the dollar index. Dollar index is down quite a bit. I imagine part of this is due to the CPI today, but not entirely, right? We did see a little bit of a drop in the CPI report, but the dollar index had been falling prior to that anyways. You mentioned safe havens being a little bit more attractive currencies being, the yen and the Swiss franc. Do you think that's why you're seeing some dollar weakness today? I think this is one of the more fascinating topics to me right now in markets is what's happening in the bond market and what's happening with the dollar index. I had somebody ask this question to me earlier, and I wanted to see what you had to say about it. Why is the dollar so bearish when we had some, what many would consider optimistic news for U.S. trade relations going forward?
Right. As you're speaking, I just noticed that the euro also, which is, I guess, somewhat of a safe haven, is up 1.8% today. Mm-hmm. So we're really seeing a lot of movement. As far as your question, it seems that there is a lot of, I think, again, we go back to uncertainty with the U.S. dollar, that investors are simply not quite sure where things are headed, and they're playing it safe for the most part and going to the safety assets, uh, which could be bonds, or we could also be the Japanese yen, or even the other non-US dollars with all the
or gold, which
unpredictability.
is up 2% today.
Gold as well, yes. So I think just the uncertainty, the unpredictability is really keeping people away from the U.S. dollar. Again, that may change now that we have the suspension in tariffs, but investors with really the massive sell-off we saw, that included a lot of safe haven flows, and perhaps that's lagging a little bit, even though the markets are up and the suspension has been announced. Perhaps we'll see the U.S. dollar regain some strength, but I think that uncertainty is going to hang over it for a while longer.
That's a good point, Kenny. And I guess that was the part two to that question, is we're seeing other safe havens attractive right now. But my best guess would be that if you do see this economic slowdown concerns realized globally, I think that there would be that flow back to the U.S. Because again, if many countries started to enter recession at once, at least at the time of recording this, right, the U.S. dollar is still considered a safe haven currency. It just doesn't seem to be as attractive right now as some of the other alternatives on a relative basis, just because of the uncertainty, as you mentioned, with the administration, with the trade negotiations. There's just a lot of questions in the meantime about the dollar. But if you see a global recession and a reel back on trade conversations, I imagine that dollar would start to look attractive again. But again, there's no telling how far away that is. It could be tomorrow. Recessions could be on their way. We could be entering one right now and find out later, right? That's just the unpredictable nature of markets in general. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.